Philippines is said to be one of the fastest growing economies in Asia, with about 270 stocks listed on the Philippine stock market and only 30 stocks in the Philippine Stock Exchange Index, or PSEI. The Philippine stock market continues to remain at an attractive level for local and foreign investors. Global Strategy Real Estate keeps you updated with the latest information on the Philippine stock market to prove you just that. In collaboration with AB Capital Securities Inc., Global Strategy Real Estate presents to you the weekly stock market wrap-up, posting every Friday of every week. Hello everyone, welcome back to the weekly stock market wrap-up with AB Capital Securities Inc. Today we have Mr. Lance to give us this week's stock market report.
Hi, good morning everyone. I'm Lance and I'm here to give you this week's market wrap. So for the US markets, the major indices saw a bit of a rebound for this week as tech shares made their comeback as well. And on top of that, what lifted their sentiment for this week is renewed vaccine hopes after Pfizer stated that they expect a coronavirus vaccine to be distributed in the US by this year. And for the Philippines, some economic news. First, ADB downgrades the Philippine GDP forecast for 2020 to negative 7.3%, and this is from a 3.8% contraction estimate they made last June. So recall that last week, Fitch and Moody's further downgraded their growth forecast for the Philippines as well. And as I've mentioned, this is not surprising since the Philippines remains to be the COVID-19 hotspot here in the Southeast Asia. Second, FDI is up 7.1% in June to $481 million. So for the FDI, we don't expect to see sustained growth in the coming months since the Philippines remains to be in recession. Third, cash remittances grew 7.8% in July versus the 5.4% contraction estimate. So this is very good for the Philippines since OFW remittances usually account for 10% of the country's GDP. So if we see this sustained in the coming months, if we see at least a flattish growth for OFW remittances, we think that should bode well for the Philippine economy and as well as the Philippine peso. And finally, car sales plunged 39.5% in August. So this is not surprising as well since amidst a pandemic, consumers usually prioritize buying the non-discretionary goods such as consumer staples. And some corporate news, the NEDA or the National Economic Development Authority stated that Metro Manila estimated that Metro Manila and adjacent areas lose about 1.5 trillion pesos in monthly sales given the lockdown. Second, Globe eyes up to 900 common towers for this year. And finally, PNB plans a $1 billion prime asset sale. So this should strengthen PNB's financial position. And should the sale be realized, we think that this could improve PNB's profitability since it really needs boosting right now because its return on equity is still below the PH Bank's average ROE. So on a week-on-week basis, the PSEI is up 14 points. Just like last week, for this week, the index briefly closed above the 6,000 level and immediately tumbled back to the 5,900 level. And we think that's because investors continue to monitor the developments regarding the fresh number of active cases or daily cases here in the Philippines. If you could recall, I've mentioned last week that we're seeing signs of flattening of the curve here in the Philippines as we're seeing decreasing positivity rate and decreasing average number of fresh cases. However, for this week, the fresh number of active cases or daily active cases is going back to around 3,000 to 4,000 level again. So we think that that's the reason why investors continue to remain on the sidelines. So for this week, volume turnover slightly picked up from 4.4 billion last week to 4.6 billion. So as the ghost month ends, we can expect to see value turnover improve bit by bit. And for the foreign transactions, although net foreign selling is slower, it's still net foreign selling for this week. From last week's 3.8 billion pesos, it accumulated to 1.2 billion pesos for this week. And on a year-to-date basis, net foreign selling has already accumulated to 95 billion pesos. So as I've mentioned, several institutions such as the ADB, Fitch, and Moody's have already downgraded their economic growth forecast for the Philippines, and we think that that's just going to further dampen foreign investor sentiment for the local stock index. And for the regional markets performance, this is basically the same graph as what we've been showing for the past few weeks. The countries with economies that are significantly damaged by the pandemic are still the top losers on a year-to-date basis. And for the regional currencies versus the USD, the peso continues to outperform, and this is on the back of strong OFW remittances and as well as weak imports. And for our market outlook, as I've mentioned, investors will continue to monitor developments regarding the fresh number of daily cases here in the Philippines. And given that, we expect the market to continue range trading with a downward bias, as there's really no significant catalyst to push the market higher for now. And key events for the coming week: last day of FTSE rebalancing will be on September 18, and the Philippine budget balance will be reported on September 22. And for this week, we're looking at resistance of 6,000 to 6,150, and the support at 5,700. And again, these are stock picks for third quarter. So the companies that are highlighted in red are the companies that are most vulnerable amidst the pandemic. They have earnings that will continue to be pressured as long as the coronavirus will be ongoing. And for the companies that are highlighted in green, these are companies with earnings that are relatively stable, even with the pandemic. However, should there be an economic rebound, these companies will also see slower growth as opposed to the more cyclical sectors such as the banking and the property industry. And for our bagger picks, just like last week, we still like these stocks as these companies have good growth prospects, these companies have good expansion plans, and we think once they realize that, once they start rolling out with their new projects, start with their new ventures, we think that these stocks will gain more traction from investors. And that's it for our market outlook.
Thank you for this week's stock market report, Mr. Lance. And now moving on to our follow-up questions. What are your stock predictions for next week?
Thanks for the question, Stephanie. As mentioned by Lance earlier, we expect some weakness in the market, and it seems like the market may retest again, may revisit the 5.7 and 5.4 support if ever it breaks down. I think the outlook for the next few quarters might not be as fast as everyone is expecting, so we might expect some downward bias. But again, we're sticking to our stock recommendations, stick to laggards and defensive companies. So I think among the laggards are still the banking sector. Most of the banks are still trading at least below their historical averages, and even the top three or companies like Metrobank is trading below book value. So that's actually one sector that we're looking at. And the other is consumer staples. So these are grocery chains. We still like Pure Gold, Century Pacific, and even Mary Mart looks attractive. So I think those are the two sectors that we're looking at right now that we expect that this may perform fairly well versus the market.
Okay, thank you very much, Mr. Lexer, for that. And that is it for our weekly stock market wrap-up with AB Capital Securities Inc. Thank you and see you again next week.
Follow us on our social media accounts, and for more videos, please subscribe to our YouTube channel. Thank you for watching.